There is one stock that is about to skyrocket. The company just put out Q3 earnings results. Revenue is in the high 20 millions, up 30% year over year. They have integrations with Amazon Web Services, AWS, Google Cloud, and NVIDIA. The company is Datadog, DDOG, and even as the market sells off today and over the last week, it's been down a few percent. This company is strong. Let's jump into a little bit about why they're doing so well. And again, not financial advice.
This is Sam Putnam.
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 All right, so this is the 20% plus year over year revenue growth. This is actually the last quarter. For Q3, they're guiding in this range. ChatGPT is pretty good, but occasionally it sort of, hiccups. This is the earnings reaction I'm talking about. So the earnings per share is slightly lower than expected, but this buying activity, this volume is super. So on a 5-year chart, we're getting near these all-time highs. And for Datadog, which is a data, basically analytics company, that's pretty much all she wrote. I mean, sure, it had COVID euphoria, but now it is back to those levels, which is unusual for these stocks that had COVID euphoria. There's the breakout. Pretty amazing. And at this point, what you can do is basically risk this close, just closed at 190, and risk a few bucks to make 1020. So these are the numbers. Let's see if we can get some actual numbers here from Q3. All right, that's crazy. 800 million, up 30% year over year. This ChatGPT is absolutely astounding at the amount of information it can pull. But sometimes it, is a little bit silly. This is obviously, okay, I get it. I'm the idiot. In Q2 2025, this is their report. I guess I'm the idiot. I don't know. I mean, this is Q2 earnings, right? I mean, now this thing is going to drive me crazy. We gotta maintain our advantage over AI and not let them gaslight us. This is true. This revenue, and this is a lot of customers. 4,000. Given that the revenue is big, but not over $1 billion, they have 4,000 customers. That's a good vote of confidence. I mean, the reason OpenAI is so valuable, right, even though they don't have a lot of revenue, is they have 900 million customers, right? Whereas NVIDIA has 5. So they sort of need each other. They're symbiotic. They did achieve or raise full year guidance. Revenue is now expected up in the 3 billion plus for the full year, not just the quarter. And this is the earnings per share expected. So people are buying their cloud monitoring, security system, software. Software is not the sector to be in right now. Incredibly, it's AI stocks more specifically. So that's pretty positive for Datadog. A lot of software companies, if we look at their earnings result, I mean, ServiceNow just reported, and that's down. Salesforce about to report, but in the past year, just gotten crushed. Snowflake, we'll see this Thinkorswim Schwab product is incredibly slow, but this will load in 5 seconds here. This is where they're going to report out in December. So they're sort of the anomaly. They're like very, over $1 billion annual recurring revenue, SaaS product. So SaaS in general sort of seems like it's getting eaten by AI, but these AI companies are not public yet, so it's not really being seen except in the earnings. Oh my God, dude, how could this Schwab not work? All right, well, we'll see if that loads or if we're, see, there it is. Oh my God. Snowflake, yeah, like I was saying, a big rebound, doing pretty well. So we'll see how they report when they do report. But so far, it seems like the sector is showing signs of life with Datadog. So similar tickers to Datadog too, to make sure we can really drill in on how to compare these. These are the ones. New Relic. These guys are loved by developers. NEWR. So when that loads, we can talk about that. And then CDNS, Cadence, Dynatrace, that one's been around for a while as well. And App Dynamics is a private company. Yeah, not to be confused with AppLovin. But CDNS and DT are definitely in the same breath. So here's CDNS. You know, since tariff lows, it is up 30%. Not great earnings reaction. And then Dynatrace, not a great earnings reaction either. So what you have to do if you buy this company is buy risking this level. You don't just buy, this as an investor grade stock. There are investor grade stocks you can buy. Buy a company that's gone sideways the whole year, and just, this is an investor grade stock, Sedge, where it just goes up, down, up, down, up, down, up, down. You want stocks that are smooth, App. This is the kind of company you can invest in for the midterm, the near term, the month long, the 3 month sort of timescale. Rocket Lab as well. There are certain times when you can buy these stocks where you get it with very low risk and you just get a move that's incredible. This is 40% or more. So, and as far as specific comparisons, Reddit right here, you get it right after close, it just moves up. Netflix, you get it right here after this earnings close, it just moves up for the most part. So that's what you're looking for with Datadog. That's the level. And you do want to keep an eye on these peers. Keep an eye on Snowflake when it reports, but for the most part, keep an eye on similar earnings reactions and make sure to sell if it goes below this level. So, not financial advice, but I hope you like these ideas. If you do, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I'll post that in the YouTube post section. And if you want to join a community of people on the same journey as you, head over to stockscommunity.com. Try it out for $25 for 7 days.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.